In this session, we'll hear from Dr. Simon Baptist, Global Chief Economist and Managing Director Asia at the Economist Intelligence Unit. Simon will give us a macro outlook of the global economy in the wake of the COVID-19 worldwide pandemic and the current affairs issues affecting our future as we witness shifts to the new economy.
Hello, I'm Simon Baptist, Chief Economist of the Economist Intelligence Unit. Today, I'm going to be sharing with you my global and regional economic and political outlook for 2021 and beyond. Of course, 2020 has been an unprecedented year, and 2021 is going to continue the high level of uncertainty that we've seen, and there will be a lot of key events and key trends that we'll need to pay attention to in financial, property, and other markets. The first thing to remember is that the downturn from the COVID-19 pandemic is going to be deep. This is the worst crisis that the global economy has seen in more than 100 years. This is much worse than the financial crisis in 2008, 2009, and it will continue on into 2021. While there will be quite a lot of recovery from the depths of this year, so some of the headline growth rates are going to look quite big as lockdown measures are eased and economic activity starts trending back towards normal, it is going to take many years for the global economy to get back to where it was before the pandemic. Most economies will not recover their level of GDP that they had in Q4 2019 until 2022 or 2023. Luckily, here in Southeast Asia, this is one region where GDP will get back to where it was next year, along with China, the only two big economic regions where that will happen. But it does mask a lot of differences between different economies, with places like Vietnam recovering and Indonesia recovering more quickly, and places like Thailand, Malaysia, and Singapore having deeper downturns and recovering much more slowly. Uncertainty is going to remain high next year. A key element of the uncertainty remains the medical and epidemiological elements of the COVID-19 virus itself. How fast does the vaccine come along? How quickly can it be rolled out and get populations to a point where there's enough coverage so that distancing measures can be relaxed? And does the virus mutate and become maybe more or less virulent? This remains the key uncertainty for the global economy next year. But there is more. We've had a US election, a new president, Joe Biden, coming in January. His policy agenda beginning to take shape. Some things we have a good idea of where they'll go, some differences, some new directions, but a lot of areas where we're still yet to see who will be in the key positions and what the key policy directions are going to be. And the US approach to the Asia region in particular, something that we will all have our eyes on. We're going to have a hard Brexit at the end of 2020. That's going to cause ruptions in international trade through 2021. And we're also watching the high levels of government debt very carefully and whether there's a possibility of any sovereign debt crises leading to a second recession around the world. And by the way, there are some economies, such as India, where we do expect stresses in the financial sector to result in another recession through parts of 2021. And finally, do bear in mind some of the key trends that have been accelerated or created by the COVID-19 pandemic. The first one is the rise of nationalism, the revenge of the state. Governments are growing in importance. Governments have spent a lot of money around the world to get economies through this pandemic. The share of government debt in the economy, the share of government activity in the economy is now substantially higher than it was. So governments are now going to have a bigger role. It will have implications for the corporate sector, will increasingly be judged on how their corporate goals are also contributing to national goals, particularly where FDI is concerned, or particularly in places where companies have received a lot of subsidies in terms of interest write-offs, rent holidays, or wage subsidies. Questions about privacy, I think, are going to come to the fore over the next couple of years. The information technology revolution was already changing the nature of privacy and the nature of the relationship between companies, customers, individuals, and the state. This trend has accelerated through the pandemic. Now we've given up a lot of data, tracking purposes, for health purposes. As the pandemic recedes, people will probably not want to continue handing that data over, but governments in particular are going to want to keep it, and firms are going to be in the middle, caught between regulators and customers. The US-China trade war is going to continue. It's been accelerated through this pandemic. China and the US are now more clearly at loggerheads than they were beforehand. In the short term, China's economic position has improved. It has gotten closer to overtaking the US, which I think will now happen in nominal GDP terms at market exchange rates sometime around 2032. So that date has been brought forward by the pandemic, but at the same time, China is having more geopolitical challenges and foreign policy looking to have a new direction under Joe Biden. Normally in December 2020, we wouldn't be spending much time talking about the economy this year, but the numbers are really still worth taking note of. At the EIU, our forecast for the global economy this year is that it will shrink by 4.7%. And you can see here what is happening in all the different regions around the world. Only one big economic region staying in positive territory this year, that's China, growth of 1.8%. Very good by international standards this year, but of course, much lower than the 6 or 7% that the Chinese economy had been used to. Looking around the rest of the world, the hardest hit region, India, followed by the Eurozone, followed by Latin America. They are the three regions that have seen the biggest economic hit. They've also seen some of the largest outbreaks of the pandemic. Then in the middle kind of ground, we have places like Japan, Middle East, Africa, Australia, Russia, all shrinking by between 4 and 6%, roundabout at that global average. Doing a bit better than the global average, the US and Southeast Asia, both down only by 3.8%. Overall, the recovery in the US and China is going to be faster than that in Europe. Here's a chart. The snake kind of shows you when we at the EIU think different economies are going to get back to where they were in Q4 2019. You can see first up, China, it's already back. It did lose some output in Q1 and Q2, but it's already recovered that. Its economy is now bigger than where it was in Q4 2019. Next year, in the second half of the year, Indonesia and South Korea should also get back to where they were. Followed through in the second half of 2022, some of the big developed economies, Germany, US, Canada, and France. Then around the rest, you can see some places like Mexico, Italy, Japan. We are not expecting to get back to where they were until 2025. So it could, for some economies, it's going to be a 5-year recovery cycle. Overall, it's not going to be a quick bounce back. There'll be a slow grind back from here. What's going to matter in terms of getting to the recovery? It's going to be how much fiscal space do you have? Is the government willing and able to spend? Is monetary policy suitably flexible? What's the structure of the economy like? Are your key sectors compatible with social distancing measures? Can they benefit from the return of pent-up demand, where, for example, it's probably better news for industrial sectors as opposed to a lot of service sectors? What's your export market exposure, and what are the labour market dynamics? How fast is your workforce growing? What's the level of job creation, and what is the level of job losses through the pandemic? Here are some key themes for APAC, a few things that we think you should be looking at in each different market over the next 12 months. I won't go through each country in detail, but you can see for any economies that you're interested in what we think some of the key factors are. So looking at China, some key trends for China next year. In the international scene, the huge increase in global distrust of China is going to cause it difficulty in its political and then also its commercial relationships, and increasingly aggressive political moves by Xi Jinping domestically, looking to further consolidate his power and looking to extend his term beyond the traditional second term that he's already in now. In India, expecting a double-dip recession, increasing tensions with China, but the government perhaps taking the chance to do some of the easier reforms that have been on the to-do list, using the necessity of improving the economy to recover from the pandemic as a reason. In Japan, Digitalisation has been a key trend. Already a highly tech-driven economy, but in many elements, so particularly in the public sector, it has been a laggard in terms of digitalisation. This is now changing through the pandemic, and some business opportunities likely to come, probably some snap elections coming, and getting an increasing geopolitical and military role, deepening its ties with the Quad Alliance of the US, Japan, Australia, and India. In Indonesia, key thing we're watching, the Omnibus Bill, which is some policy reforms that Jokowi is pushing through. It's a good thing, but it's not as good as it looks, even though overall it is going to be a welcome small improvement to the business environment in Indonesia. Still a big focus on infrastructure and some concerns around the stability of foreign exchange. For Thailand, we have deflation as a key risk, probably some consumer tax breaks coming, and of course, these student protests that have been going on, and unparalleled questioning of the role of the monarchy in Thai society. I think it's likely, similar to what we saw in Hong Kong, the government will pursue a strategy of making a few small concessions to appease the moderate protesters, while also cracking down harder on the more hardcore protesters and hoping they can outlast them. That's our core scenario. But of course, there are other possibilities. Sri Lanka been benefiting as global tea demand has been high, and the foreign workers it has had working abroad in sectors such as healthcare has meant remittance inflows have stayed pretty strong. That's also been a benefit for the Philippines. Over the next 5 years, there's going to be some new Asian tigers coming on. This chart shows our EIU forecast growth rates for some key APAC economies on average between 2020 and 2024. I wanted to take an average because the annual figures are, of course, going to be highly affected by the timing of the COVID-19 pandemic. Over there on the left-hand side, we have the fastest growing markets: Bangladesh, Vietnam, Myanmar, and there's China. Actually, it's come up these rankings as a result of the pandemic, as it's been relatively less affected than others. Notably, moving down, as compared to if I'd done this chart 12 months ago, is India, where we do now have growth. We do now have growth being a lot lower than it had been before. And then over on the right, some of the economies facing more demographic and challenges, such as Singapore, Thailand, and Taiwan. The height of these bars shows you the overall growth. And then the part in light blue shows you the amount that's due to consumption. And so the dark blue part is the bit that's due to investment and exports primarily. So if you're looking at where a consumer market's going to be most vibrant, it's where those light blue bars are the highest. So we can see the Philippines, we can see Bangladesh, we can see Vietnam and Cambodia, all there as places that are going to have quite strong consumer markets. On the other hand, where the dark blue is big, that's where we're going to see a lot of activity in the investment sector, and China still being one of the key economies from that perspective. Asian currencies initially weakened at the beginning of the pandemic. Since then, many of them have recovered, although there have been some exceptions. The rupiah has remained pretty weak. We are expecting over the next 12 months, most Asian currencies are going to continue to strengthen against the US dollar, recovering more of that ground that they lost through the early parts of the pandemic. Particular currency that's going to go up a fair bit is the yen, and we see the yen along with the euro as being some of the stronger currencies next year. Also, the Chinese renminbi, given China's strong economic performance. On the weaker side, the New Zealand dollar, Singapore dollar, UK pound with Brexit uncertainty, and the Indian rupee. These dynamics really driven by what's economic growth like in each country and how much action are central banks taking. And the more interest rates get cut and the more liquidity central banks pump out, the weaker their currency tends to become. And this is one reason why the US dollar should be relatively weak over the next year, because the US central bank has a good capacity to keep supporting with extra liquidity. COVID-19 has, as I've said, accelerated many pre-existing trends. One of them has been a turn inwards by some of Asia's key economies. China, India, Indonesia, all now much more focused on self-sufficiency and domestic economy. It's not a full return to the import substitution policies of decades past, but life is going to be a bit more difficult for foreign firms in all of these three key markets. I've shown up here our EIU business environment rankings across different criteria, such as technological readiness, infrastructure, labour markets, taxation, where you can see the higher the rating, the better the business environment. So China has key strengths in technology, infrastructure, and labour market. Indonesia's strengths, relative lack of foreign exchange and trade controls, and tax rates, while India has large market opportunities as well. So different economies having different strengths. But with all three big economies being more focused on the domestic side of things, if you're a foreign firm working in those markets, do pay attention to the domestic policy priorities and think about how you're fitting in with those. I mentioned Southeast Asia has been one of the more successful economic regions this year and should actually be quite strong next year, getting back to where it was in Q4 2019. But that is largely led by the stronger recoveries we're expecting in Indonesia and then also in Vietnam. Vietnam, one of those rare countries in 2020 that has continued to grow, actually has not been in recession this year. Huge diversity in terms of how the pandemic has been dealt with. Very large outbreaks in Indonesia and the Philippines, relatively smaller outbreaks in Thailand, Malaysia, Vietnam in particular, and also in Singapore. So the recovery speeds depends a bit on the effectiveness of pandemic measures, but it also depends a lot on the economic structure. And this is why Thailand, Malaysia, and Singapore have been so hard hit. Singapore, because of its the nature of its economy as being built on international connections across all sorts of sectors, maritime, aviation, tourism, and MNC headquarters. Malaysia, trade, and the oil and gas sector, where we've seen a big drop in energy prices over the last 12 months. And Thailand, of course, it's tourism, and that's looking like it's going to be a long-term structural challenge for the country as the amount of international tourism looks to have permanently taken a step downwards. In China, investment is still the biggest driver of activity. The Chinese government has been trying for many years to increase the share of consumption in the economy, and it's had some successes, but crises do keep coming along and making it more difficult for them to achieve this policy goal. The industrial sector has been the big driver of the recovery in China's markets. They've been stocking up also on things like semiconductors, trying to get ahead of potential US sanctions. And with the pandemic largely contained, China's industrial sector is looking to push out goods as its factories get back to full production faster and take some global advantage. If you're doing business in China, do pay attention to the 6 principles that are now going to guide economic policy. They've moved away rather than a 6% growth target. They now have 6 principles, such as reducing income inequality and improving environmental standards that are going to be driving growth decisions. But the overall growth mentality of the Chinese policymakers has not gone away. They have replaced their GDP target with an income target. Of course, they are very closely connected. The implied growth that they will need to achieve to hit their income target, it's fairly vaguely specified, but it's looking like they'll still be looking to achieve something like 5 to 6% growth per year, percentage growth per year over the next 5 years. Digital sector, a critical one in China. It's been growing as a share of the economy, been a big driver of the recovery as well. The government is now starting to turn its regulatory eye onto the digital sector. So high levels of innovation in China, but also high levels of market and policy risk. Indian economy is now picking up, but there are weaknesses in the banking sector. There's large levels of bad debts, and we think that's going to cause a reduction in bank lending and investment through mid-2021. So we are expecting to see another recession next year in India, much shallower than this year's though. This year, the economy will shrink by close to 10%, the biggest decline of any big economy in the world. Next year, it will recover by 7%, so still remaining a few percentage points below where it was and not getting back to where it began the pandemic until 2022. Australia's had a very effective COVID response, but it has caused a big cost to the economy. This is in two key directions. One, relations with China have deteriorated rapidly. That was already happening. There had been long-standing tensions between the two countries, for example, around the law that Australia passed regulating foreign interference in politics, which was correctly seen as a move against China, and been deepening its military alliances with Japan, with the US, and now increasingly with India, and also led those international calls for a inquiry into at the WHO into the origins of COVID-19, which China was angry about. So China's now effectively started a trade war with Australia. It's put tariffs or other regulatory attacks on the majority of Australian exports into China, really everything with the exception of iron ore. So that's going to cause a big challenge for Australia. The second big challenge for Australia is going to be, now that they've controlled the virus, how do they reopen to the rest of the world? The longer the country stays closed off, and it has had some of the strongest border restrictions of any country, it's going to continue to cause some economic damage. But in the long term, that break with China is a big, big challenge. Global supply chains were already adapting pre-COVID-19. This process is continuing. Let's just start by noting the huge role that China has in global supply chains and in the global economy. On this map, all the countries in red, China is the biggest trading partner. Those in orange, green, blue, it's the second, third, fourth biggest trading partner. So you can see for almost every country in the world, China is the biggest or one of the top four trading partners. This big market, the Chinese market, has brought a lot of opportunity, but it does carry risks, and especially where there is a concentration of export demand. Places like South Korea, like Australia, are now finding either are finding or have found to their detriment that China will not hesitate to bring together economics and politics. You cannot separate the two. If you have a political issue with China, they will make sure your exports are affected as well. That's whether it's goods or whether it's services like tourism or like education. But I do think that supply chains are going to shorten and will be de-risked. Supply chain managers in firms are going to be putting more emphasis on resilience and on reducing risk than on efficiency. The just-in-time supply chain model is going to be dialed back a little bit rather than reversed. It'll just be a matter of companies being willing to incur a little bit of extra cost in order to achieve diversification of sourcing or to bring supply chains a bit closer to home, where closer to home is not just about kilometres, it's also about places with similar regulatory environments, similar cultures, close business links, all of which can reduce the risk inherent in certain supply chains. With Joe Biden winning the US election, there's a lot of questions about what is going to happen in terms of trade policy with Asia. Overall, it's going to be a more positive environment for Asia. While I don't think the US is going to join one of the big international agreements like the CPTPP, I do think we'll see a reduction in the use of tariffs as a weapon. That said, tariffs that are already in place with China, most of them likely to stay in place. Perhaps he will reduce some on certain consumer goods to reduce the prices of goods for people in the United States, but it's going to be politically quite difficult for Joe Biden to remove Trump's tariffs, even if he's not as minded to increase them further. So it's probably going to be a status quo, maybe some tariffs on consumer goods getting removed as far as US-China goes. In the short term, life will be easier for Chinese firms. I think we'll see fewer unpredictable moves against individual companies. For example, think about the kind of attacks that Trump has started on WeChat or Alibaba or Huawei over the last 12 months. But in the medium term, it could be more difficult for China. I think Biden is going to be more effective at getting together the US alliance system, Europe, Japan, Australia, even India, into a more united front against China when it comes to issues like IP protection and mutual regulations of foreign direct investment. So Asia is going to be the center of some supply chain realignment, particularly things moving out of China. Japan is pushing its firms to go into India. That's a political push. Now we need it to be followed by the economic justifications and improvements in the business environment in India for that to be effective. This chart here shows you some of our ratings at the EIU of different economies in Asia and how we think they rate as in terms of supply chain hubs. The more blue you have and the less red you have, the easier a place you are to do business. Of course, you've got to match that against the costs of doing business in these markets as well. There are going to be some winners from the US-China trade war, particularly in Southeast Asia. Malaysia, Vietnam and Thailand, 3 economies that are well placed to be a market that benefits from inward investment coming in, to provide that diversification away from China, particularly in ICT and automotive. There will be some benefits in some other economies too, such as India and Indonesia, but then some places and some sectors that are going to see a bit more disruption. Japan, South Korea, Taiwan in particular, right in the center of this China-centered electronic supply chain, particularly semiconductors, the most politically sensitive one. Disruption will be some costs, but also some opportunities. Taiwan has an opportunity to be a bigger supplier to the US, but it's also under pressure from the US to stop supplying companies like Huawei with semiconductors. So a difficult kind of path for it to tread, some similar dynamics in South Korea and Japan as well. There's some geopolitical ructions coming up at the end of the year. So I already mentioned Biden and trade. We will see re-engagement with trading partners. That will be a positive thing for the global economy, but I don't think we're going to see a large return to trade deals. As far as China goes, I think he will overall maintain the confrontational stance with China, but the tone will be more pleasant. And there'll be more talking and fewer unpredictable actions, and he will use different tools, perhaps a slight return back to multilateralism. We'll probably see a US return to things like the Paris Climate Change Agreement or the World Trade Organization, and climate being an area where we could actually see some coordination between the US and China in the years ahead. China's now announced this carbon neutral target, while Biden has said he's going to rejoin the Paris Agreement, so there could be some areas of cooperation. We're also expecting either a hard Brexit or no deal at the end of 2020. After years and years of negotiations, we've gotten to a point where the deal will be a very weak one. And in fact, negotiations are going to have to continue into 2021 around a whole lot of topics that are just not going to be in time. So there will be quite a lot of disruption in the UK particularly, and then also related European economies through the beginning of 2021. Let's just finish off by covering a few industrial and energy trends in the new economy that I think are worth paying attention to. Of course, the 4th industrial revolution is a key one. Digitalisation is proceeding apace in key sectors. Anybody that's got the cash flow to do so has been accelerating their digital transitions through 2020, increasing their pace of automation. This has been accelerated by COVID-19, and we're seeing more and more value being unlocked. And also automation is now a necessity because you have to run factories with social distancing measures, and so automation is a way to keep your business going in the face of pandemic restrictions, which we expect to continue to come periodically in a lot of economies until the end of next year. And then finally, the clean energy revolution. It is picking up pace. This chart here shows you how different types of energy sources have changed in terms of their demand over the last 12 months. Dark blue, 2020, and light blue, our forecast for 2021. So we've seen this year a reduction in the amount of energy being used overall, but big declines for oil and coal and natural gas, while solar and wind has seen very strong growth. There's still a long way to go, particularly in Asia outside of China. The share of solar and wind is relatively low. There are some countries that have had strong policy support, such as India, such as Vietnam. Korea, Japan have always talked a lot about renewables and not done so much. Policy looks like it may be changing there as well. The EU is going to remain the most focused on taking action to accelerate the clean energy transition, but China now sees this as a geopolitical necessity. It sees green technologies alongside automation and AI technologies as being some critical ones for international influence over the next few decades. That's partly what lies behind its carbon neutral target as well. Countries like France, like South Korea, also using the opportunity of the pandemic to take the big government spending they're doing to support the economy, using that to accelerate their digital and also their green transitions. So digitalisation and green transitions, I think, two key technologies to watch for 2021. There's my geopolitical and economic overview. Looking forward to any questions that you've got, and I hope you enjoy the rest of your conference. Thank you very much.